What's going on, guys? Welcome back to the channel. Welcome back to another video. It's Ron here. Hope you guys are doing well today. So we got a few stocks, very notable stocks that are up today. And it's kind of interesting that they're up in spite of what's happening right now, right? So let's just talk about Apple. So Apple is up just a little bit today, 0.16%. Bitcoin is down by almost 3% today. Amazon's up a whole 1.5% points today. JP Morgan Chase, one of the largest banks in America's, down just under 1%. You got Ethereum down 2.5%, and Boeing, how do I describe Boeing? Boeing's more like a defense contractor. So basically, as long as we're going to war, as long as we're looking like we're going to be involved in the war, or a war, as long as we're involved in a proxy war, then chances are Boeing and Raytheon, companies like that, they're going to do well. And you'll probably make money, generally speaking. Of course, this is not financial advice. By the way, if you guys are new to the channel, consider subscribing to the channel while you guys are at it. Go ahead and smash that like button. I would totally appreciate that. So, the Biden administration, Washington, D.C., the White House, they are still up in the air with this whole debt ceiling debate. Are they going to raise the debt ceiling? Is Congress going to allow the debt ceiling to remain as it is and ultimately cause millions, billions of dollars, maybe trillions of dollars in bills and government expenses expire and lapse and go unpaid? Now, obviously, this would be a tremendous detriment to the United States. We're already, the United States dollar, the US dollar, the currency, the fiat currency is already at risk of losing its position as the global reserve currency. So how do you prepare? How do you and I prepare? Now, we know what's coming down the pipeline. So if we don't prepare, it's kind of like, you're watching this train wreck slowly approach. It's kind of like, you're stuck in the intersection of a railroad crossing, and the train's not moving very fast, but you can hear the horn honking, and the train is coming at your car. Now you look out the left of your window, you can see it's about quarter mile down the road, but it's moving. It's gonna hit your car at some point. It's only going like 5 miles an hour, but if a train hits you, regardless, your car is totaled, and you could likely be in some serious shape. So what do you do? How do you prepare? How do you prepare? Is there going to be economic collapse? Oh, absolutely. There would be economic pandemonium in the streets if the debt ceiling is not lifted. If, more importantly, not necessarily if the debt ceiling is not lifted, there would be pandemonium if the United States government defaulted on its debts. Because that's worse than the debt ceiling not being lifted. Because technically, as long as the government made good on investor debt, international investor debt, mainly China, paying the bonds, paying the interest due on the bonds, making payments that are due. But let's look at it like this. Realistically, we've seen this so many times. And the stock market, I think this is why the stock market hasn't really plummeted. The Dow Jones right now is sitting at 32,799. Stock market just closed. S&P 500 sitting at 4,115. Now, we just heard from Bank of America. They're one of their strategists is saying that S&P 500 is probably going to hit 4,200 this year. We're still within that range. I don't personally think that the U.S. government, I don't think that Congress is going to let this debt be defaulted on. That's my bet. That's my guess. Now, the Democrats, the Republicans, they both want what they want. And they're using this as a bargaining chip, basically. Unfortunately, many people, many Americans are going to be caught in the crosshairs if certain negotiations are not met in time. Now, I'm not going to go into all the different areas where people could be impacted by this, but we covered this previously. But the simple fact of the matter is that we have to prepare for what is coming down the pipeline. Now, The S&P 500 is still up 8% this year in spite of what is going on. The Dow Jones is down 255 points today, but I don't let the intraday movement sway me, right? Stock market's gonna go up and down. Long term, if we look at history, more millionaires have been created by investing in ETFs, index funds, and mutual funds than they have by allowing the stock market to scare them away and panic and exit the market, ultimately selling their stocks at a loss. Now, the goal for me, and I know the goal for you, is to be better off financially. So for me, I'm not selling out of my stocks. A lot of people were asking me, hey, Ron, are you going to short this market? Are you going to short this stock market? And sure, I could invest in like one of these ETFs that shorts the market. I think Vanguard, Charles Schwab, maybe iShares has a couple of different ETFs that you can buy, and by buying them, you would make money if the stock market goes down. And the stock market could go down. But I do personally still feel like we have much more upside in spite of all the negative news that we've seen over the last several weeks. Let's look at Walmart. So Walmart stock is down $147 today, right? Excuse me. Walmart stock is valued at $147 today. That's ticker symbol WMT. So today Walmart stock is down 70 cents. But overall, let's just see how it's looking for the year-to-date performance. Okay, so year-to-date performance, Walmart's still up. The Walmart stock is still up, and Walmart, on top of that, pays a dividend yield of 1.54%. And they've been paying a pretty strong dividend for years, even before the banks started raising interest rates, thanks to Fed Chair Jerome Powell, relentlessly attacking inflation and raising interest rates. Walmart has been paying a dividend for as long as I can remember. I don't think Walmart's a dividend aristocrat. I got to check that. But they're still paying a dividend. That shows a lot of strength, even in spite of how many Walmart stores are slated to close and how many Walmart stores have already closed. Now we look at Costco. So Costco's sitting at $482.76. But Costco's down $2.11 today. 0.44% from a percentage standpoint, right? Now, for those of you guys who don't know, Costco's ticker symbol COST, cost, if you wanted to look it up on the stock market. But if we look at Costco year to date, Costco's up $29 a share. They're up 6.5%. So actually the S&P 500 outperformed Costco for the year to date so far. That's just for 2023. But here's the other thing. Costco's still paying a 0.85% dividend. So another stock that is still holding its own, and these are retail stocks, holding their own in spite of everything that we're hearing. So, how do we prepare? We gotta talk about it. This is a serious conversation. Layoffs are happening. The stock market could very well go down. You could lose your job. Credit card bills are still climbing. Record levels of credit card debt at this point. We're approaching like $1 trillion in credit card debt. It's unbelievable. Yet the unemployment rate is still very, very low. And the Fed is still hammering away at raising these interest rates. So again, how do we prepare, folks? What are you doing to get ready? I know for me, you got some fundamental strategies that you want to implement. So number one, I would say absolutely, first and foremost, if you haven't done this already, this is like basics 101. Make sure you got an emergency fund, at least $1,000 in an emergency fund account to make sure that things don't get worse for you. Build that emergency fund up to a minimum of 6 months. Target a year. Of course, this is not financial advice. I'm not a financial advisor. I'm just saying what I would do. I'm not a tax strategist. I'm not a tax advisor. The next thing I would do is I would make sure that if my company is laying off, I need to be looking for a new job. Don't wait till you get canned. Don't wait till you get laid off or fired. Get the feelers out there. Update your resume. Get ready. Get prepared. If you hear that a storm is coming, don't ignore the warning signs. Pack an umbrella in the car. Leave it in the car. By packing an umbrella in the car, you have it just in case. And best case, so worst case scenario, it rains, you got your umbrella. Worst case scenario, you get laid off, you get fired, you have an offer from another job, and hopefully it's pretty much, business as usual. No real interruption in your income. Best case scenario, you don't get laid off. Congress raises the debt limit, the United States doesn't default, and you get a job offer at a better company for more money. What do y'all think about that? What are y'all doing to prepare? Drop me some comments down below, guys. If you guys are new to the channel, it's Ron here. Definitely drop a like for the video, share this video with someone you care about, and subscribe to the channel. I look forward to seeing you guys on the next one. Y'all be safe.